Imagine waking up one day, feeling completely normal, and by afternoon, you're in the emergency room with a broken arm. In most countries, you wouldn't think twice about the bill. But in the United States, that single emergency room visit can cost more than an entire month's salary, sometimes even more. Yet with the right health insurance plan, that same visit might cost you less than a nice dinner out. Why such a massive difference? And why is healthcare in America so expensive that one medical bill can change your entire life? These are the questions millions of people around the world ask, and today, we're going to break down exactly how health insurance in the USA really works. Health insurance in America feels confusing, even for Americans themselves. You hear terms like deductible, premium, copay, coinsurance, out-of-pocket maximum, and it all sounds like a complicated puzzle designed to make people give up. But the truth is, once you understand a few key ideas, the entire system becomes surprisingly clear. In this video, we're going to take all those confusing pieces and put them together in the simplest way possible. I'll walk you through why the US healthcare system works the way it does, how different insurance plans actually function, and how everyday people use insurance to protect themselves from massive medical bills. By the end of this video, you'll understand the system better than most Americans and you'll actually be able to explain it to others. So let's get started and break this down step by step. When we talk about why health insurance exists in the United States, the first thing to understand is the cost of healthcare itself. In the US, medical treatment is extremely expensive, far more than most people can pay out of pocket. A simple broken bone can cost thousands. A night in the hospital can cost more than some people earn in a month. And long-term treatments can easily run into tens of thousands of dollars. Health insurance exists to protect people from these unpredictable and overwhelming costs. Instead of one person paying a massive bill alone, millions of people contribute small monthly amounts. This idea is called risk pooling. It spreads the financial risk across a large group so no individual is crushed by a medical emergency. Without insurance, even basic care can become financially damaging. With insurance, people get access to a network of doctors, negotiated lower rates, and financial support when something unexpected happens. It's not just about covering bills, it's about security, stability, and ensuring that one medical issue doesn't destroy someone's financial life. Health insurance is essentially a safety net in a healthcare system that is built on private providers, high costs, and complex billing. Now that we know why insurance exists, understanding the key terms makes everything easier. The premium is the amount you pay every month just to keep your insurance active, whether you use it or not. Think of it like a subscription fee. The deductible is the amount you must pay yourself before the insurance company begins helping you. If your deductible is $2,000, you have to spend that much on medical bills before your insurance starts sharing the cost. Copays are small, fixed fees you pay for services like $25 for a doctor visit or $10 for a prescription. Coinsurance is a percentage you pay after meeting the deductible, such as 20% of the bill, while insurance pays 80%. Then there's the out-of-pocket maximum, the most you will ever pay in 1 year. After you reach that limit, your insurance covers everything 100%. One of the most important concepts is in-network versus out-of-network. Insurance companies make special deals with certain doctors and hospitals, creating a network. Using in-network providers costs much less. Going out-of-network can mean huge bills. Once you understand these terms, navigating American health insurance becomes much easier. The US has multiple types of health insurance, and each one works differently. Employer-sponsored insurance is the most common, where companies provide health coverage as part of your job benefits. The employer pays a big part of the premium, making it cheaper for workers. Then there are marketplace or Obamacare plans, designed for people who don't get insurance through work. These come in bronze, silver, gold, and platinum levels, each offering different balances of cost and coverage. Many people qualify for subsidies, which lower their monthly premiums based on income. Medicaid is a government program for low-income individuals and families. It provides free or very low-cost health care, but eligibility varies by state. Medicare is another government program, but it's for Americans aged 65 and older, as well as certain younger people with disabilities. Medicare has different parts for hospital care, medical services, and prescription drugs. Finally, some people buy private insurance directly from companies. Though these plans are often more expensive without employer or government help, each type of insurance has its own rules, networks, and costs, which is why choosing the right one depends heavily on your age, income, job situation, and health needs. When you actually use health insurance, a step-by-step process takes place behind the scenes. First, you visit a doctor, hospital, or clinic. At check-in, they confirm your insurance information to see what benefits your plan includes. After your appointment or treatment, the healthcare provider sends a claim to your insurance company. This claim is basically a detailed bill listing every service you receive, exams, tests, procedures, and more. Your insurance company reviews the claim, compares it to your plan details, and decides how much they will cover and how much you must pay. They apply your deductible, copay, or coinsurance depending on what stage you are in for the year. Once the insurance company finishes reviewing everything, they send you a document called an EOB, or Explanation of Benefits. This isn't a bill, it's a summary showing what was charged, what insurance paid, and what you still owe. After that, the provider sends you the final bill. Sometimes you owe nothing, sometimes just a small copay, and sometimes more if your deductible wasn't met. This entire process is designed to make sure the cost of care is split correctly between you and your insurer. But it often feels complicated because of all the moving parts. The reason the U.S. health insurance system feels so complicated is because the entire healthcare industry is built differently from many other countries. In the U.S., most hospitals, clinics, and insurance companies are private businesses, not government-run. This means prices vary, networks vary, and competition increases complexity. Each state has its own healthcare regulations, so rules change depending on where you live. Administrative costs are high because so many companies, billing systems, and middlemen are involved. Doctors charge different prices. Insurance companies negotiate different rates. And hospitals add separate fees for facility use, equipment, and specialists. This patchwork system leads to inconsistent prices and, sometimes massive bills if someone doesn't understand their coverage. Another reason for the confusion is that Americans often mix multiple programs at once: employer insurance, Medicare, Medicaid, private plans, and government subsidies. All these layers create a system that works, but not always efficiently. Understanding it requires patience and clear explanations, which most people never get. That's why so many Americans feel frustrated or confused when dealing with insurance paperwork, networks, or medical bills. Choosing the right health insurance plan can save you thousands of dollars every year. The first step is understanding your own health needs. You rarely visit the doctor and just want protection for emergencies. A plan with a lower premium and higher deductible may be the best choice. If you have chronic conditions or you visit the doctor often, a plan with higher premiums but lower out-of-pocket costs might save you money overall. Check whether your preferred doctors, hospitals, and specialists are in network, because going out of network can lead to much higher bills. Compare premiums, deductibles, copays, coinsurance percentages, and the out-of-pocket maximum. Many people choose a plan based only on the monthly premium, but that can be a mistake. What matters most is how much you might pay in a real medical situation. Review each plan's drug coverage if you take regular medications, because costs vary widely. Think about whether you need dental, vision, or mental health services, and whether these are included. Take advantage of preventive care, which is free on most plans. And finally, if you qualify for subsidies on marketplace plans, use them. They can significantly reduce your monthly cost. The goal is simple: choose a plan that fits your life and protects you financially. And that brings us to the end of this breakdown of how health insurance works in the United States. By now, you've seen that while the system can feel overwhelming, it becomes much clearer once you understand the basic building blocks: premiums, deductibles, networks, and how different plans fit different people's needs. The U.S. healthcare system may not be perfect, but knowing how it functions gives you the power to make smarter decisions and avoid unexpected financial stress. Health insurance isn't just paperwork or fees. It's a safety net designed to protect you during some of life's most unpredictable moments. If you take the time to compare plans carefully, check your coverage, and understand the numbers, you can save yourself thousands of dollars and a lot of worry. If you want more videos where we explain complicated systems in simple language or explore how healthcare works in other countries, let me know in the comments. And if this video helped you even a little, make sure to like, share, and subscribe so you don't miss the next one. Thanks for watching, and I'll see you in the next video.